And there it is. Well, there we go. It should be live on YouTube for those of you who want to actually look at the screens and see the numbers a little clearer than they are right here. Hold on, so let me move this. All right, there we go. Alrighty, so Albemarle, last 90 days. 90 days ago today, which would be the 15th of November. Is that right? 90 days? February, January, yeah, February 15th. Okay, so 90 days ago today, we were at, was it 128, somewhere around there? Our 90-day triple top. We got triple top. Check it out. Triple top 90 days ago. 153.0, 153.54, 153. Is that right? I say 153.54, 153.09, and 153.21. Okay. From there, we dropped down, hit a low at, what is that, 108, and that was in the middle of, that was the beginning of February. But what we want to see here, 30 days ago, 112. Now, nice run up from 30 days ago to where we are with our 30-day high, and that's 143.19 right here. 143. Now look at all this here. Okay, that's all potential profit making, profit taking, right? Gap up, gap up, gap up, top of 30 days, and look at this gap down. Now, you know what they say about profit right here? If you bought, at the beginning of the month and you didn't take any of this profit, the market maker took it away from you right here. Okay? The market maker took away your opportunity to grab a profit. Look at this. We're already, YouTube already going to be dead very soon because battery's dead. Hey Al, how you doing? I didn't charge the battery in this phone over here. And the wife is not here, so she took the other phone, so Instagram. No Instagram tonight. Just Facebook, TikTok, YouTube. Okay. Noel, thanks for joining. Okay, so anyway, if you don't take your profit, the market maker takes it away from you. Okay, whatever happened here to make it drop for a day, the market maker took all your profit away, and then you dropped all the way down to a new 30-day bottom. And that new 30-day bottom was on the 5th. So that was last week. And that bottom was 106.69. So we had 5 days to the upside. Okay, 5 days to the upside, 3 days pullback. All right, so we ended up at 122.14. No, I have Albemarle, but where's my Albemarle? Not here. Right here. Here's my Albemarle. Now, I jumped into Albemarle at 123. Okay, I jumped in at 123.30. I sold off the 120s and I got $5 a share. So my effective sale price would be 125.04, which is not bad. It was a nice little income. So I'm not going to be owning this come Monday because that's going to be taken away. I'm perfectly fine with that. Doesn't bother me a bit. All right, so that's Albemarle. Now, Albemarle no longer a contender for next week or the week after. So 3.15 in a second account. Way to go there, Al. Z-Man, good evening, sir. Good evening to you, sir. Charmed for your acquaintance there, sir. All right. Next. Oh. Next is going to be Ford. Farhan, you want to be invited. Well, you want to be invited to the live and have your comments. Well, I don't know who you are. I have no idea what you stand for. I have no idea of anything, so we're going to say no tonight. But if you really want to join in the conversation, DM me your phone number and I'll give you a call. That's all I can say. All right, so Albemarle, probably not going to look at it next week. I don't know if anyone still has Albemarle. I mean, if you didn't take your profit here, and then you ended up with this thing last week, okay, I don't know what to tell you. Okay, profit is not a profit until you actually take it. Okay, next on the list would be Ford. Now, Ford doesn't have its dividend coming up. It's just one of those stocks I just jump into whenever I have money sitting around. Apparently, I had money sitting around, so I bought a little bit of it. Now, let's take a look at the numbers for Ford. Okay, a year ago Ford was at 11.55. We have a double high in July. I was looking forward to hearing from you last week. Okay, Roberto, you didn't send me your phone number. Okay, DM me with your number and I will give you a buzz. I call everyone. Anyone who leaves a phone number, I give them a call. So if you didn't leave a phone number, I didn't give you a call. Okay, so double high, 1542. That was back in July. Then we have a double. What is that? Double or triple bottom? Okay, well we have a bottom 1031 was the end of October, 965. 965, that is crazy. Ford Motor Company. I know kids in elementary school who have 10 bucks in their pockets can buy some Ford. Okay, it is what it is. Well, you got to be older. Let's buy it. Caster DM, how you doing? Okay, so last 30 days. Let's take a quick gander at this. Oh, we have a 90-day high. Last 90 days, 1306. And that was back in the beginning of February. Okay, now 30 days ago, 1242. We got a triple bottom. Hear this, you ready? 1195, 1196, 1196. Triple bottom right there. The 26th, 27th, and 28th of February. Tell me a store. A store. Ooh, Dunkin's. I don't know, that's right off the top of my head. It's a store. Okay, 30-day high. A couple of days later of 1303. From there, 1, 2, 3, 4, 5, 6, 7, 8 days. Well, nope, 7 days to the bottom. We got a new 30-day contender for the bottom, but not quite the bottom. That is 1201. Now, today we open up just a little bit higher at 1206. Where was I with Ford? Not here. Here we go. Get rid of that one. All right, I jumped in at Ford at 12.24. I sold the 11.82s and brought in 46 cents a share. Okay. So I made a little bit off that. Not a huge amount, but hey, profit is profit no matter how you look at it. Those pennies add up after a while, especially when you have, hundreds of thousands of shares. It adds up quick. Let's go back to where we were. Okay. Next one on the list, JWN. JWN. A year ago, JWN is at 1668, a high at 2360. That was the end of July. The bottom would be November 10th at 1299. Nice run up from 1299 up to the high. It's a double high at 2187. So from the beginning of November to the 29th of February, so that's November, December, January, February, 4 months. Well, it's not huge, but it is what it is. But here we go. Take a look. Last 30 days. Okay, 30 days ago, we were at 1984. Okay, runs up a little bit. Has a double high at 2191. Okay, a little bit to the side, a little bit of a drop. And then here we go. That market maker's taking away your profits again. Okay, so if you buy up here, all right, okay, if you bought over here a couple of weeks ago at the beginning of the month and you didn't take your profit once up here, the market maker is taking it away. And then when you have a gap down, that's the market maker taking your profits away unless you plan on holding it. Okay, if you plan on holding it, fine, hold on to it. But she dropped and have a triple bottom at 1690 on the 7th, 1686 on the 8th, and 1690 again on the 11th, which was Monday. So we had 3 days to the upside, Monday, Tuesday, Wednesday. Thursday and Friday pulled back a little bit. But where did we end up with JWN? Okay, I'm into JWN at 1726. Okay, my 16.5s are going bye-bye. The 17s, the 17.5s, I'm going to carry those into next week. So next week, I'm still going to have JWN. I'll probably double down a little bit to get rid of these, but who knows? It's the 1750s. What are the 1750s going for next week? JWN. JWN. Okay, now I own it at 7. What was it again? Hold on a second. $17.26. All right. So I sell the 1750s next week. That one's no good. 1750s next week are 27 cents. That's still over 1%. I get no problem with that whatsoever. Okay, that being said, that's JWN. Next on my list will be Kohl's, KSS. Here we go, all ready to go. Kohl's has its dividend. Well, let's move this over a little bit. Okay, today is the 15th. Okay, today's the 15th. Okay, I didn't get called out, so I take my Kohl's into next week. So I've already collected the premium on Kohl's for this week, so I collected some money. Next week, I'm going to do the exact same thing again. Okay, first thing Monday morning, I'm going to sell my options on Kohl's. Now, Kohl's, I'm into Kohl's at $27.97. Okay, so, that right? $27.97? That's horrible. You like that's horrible. Let me double check this. Hold that thought. Okay, 28.50, 26.50, 27.90. Okay, so that's what my actual value is. All right, not a problem. But look at the premium I collected this week. Okay, 20 contracts at 23 cents a share. Sold to 26. It's 23 cents a share. Do you have any idea how much that is? That's a nice little chunk. Okay, so Kohl's, I'm into it at 27.97. Okay, so next week the 27s are kind of crap, but I'm going to sell them anyway because, hey, income is income. Do I see it going over 27? No, I don't. A year ago, we were at 22.41. We got a top at 29.65, and that was in August. Got a double bottom at 17.71, and that was in October. Okay, now the last 90 days. 90 days ago, we're at 24.69. We have our 90-day bottom at 21.47. That's 21.47 for our bottom. Okay, that's not a whole heck of a lot. We only got 116 people here. You guys got to hit that share button and share them. We get a little bit more people here. I mean, this is good stuff, in my humble opinion, of course. But oh yeah, that's right. It's Friday. We'll probably cut out early because Friday. What do people normally do on a Friday night? Who really wants to be here hanging out with me? All right, so 27.97, what I'm at. So I'll sell 27s next week and go from there. I might sell 26.5. That's 4 strikes in the money. See right here? That's where we got 24.50. 1, 2, 3, 4. The 26 is 15 cents. I think I'll do that because I don't think it's going to go that high. 126 people like to hang out with me. Oh, 129. Well, we'll see if we can get up to 200. Who knows? Anyway, let's continue on. So last 30 days. 30 days ago, 27.67. Basically went sideways for 2 weeks. Look at that, sideways. Didn't do a whole heck of a lot of anything. Okay? Basically, no big ups, no big downs. Just basically sideways. Our 30-day top was right here on the 4th. Okay, from there, we got 1, 2, 3, 4, 5, gap down, 6, 7, 8, 9. 9 days to the bottom. Why? Why did Kohl's keep going down for 9 days? Is stock a way to make money? Yeah, but this is a slow process. We're only looking for 1% per week. Hi, David. I have a question. I was on your YouTube Live. Okay. All right, Austin. Now, you can make money. We make safe, secure, predictable, and consistent 1% per week. That's our goal. Okay, now I've been doing rather well this year. Nuts. I uploaded my numbers for this week. And I couldn't believe the numbers for this week. It was just freaking nuts. Okay. Account number 1. We're still in the first quarter. I'm at 20% already in this account here. But you think that's crazy. Look at this one over here. This one this week is up 40%. 40% in the first quarter. That's freaking nuts. But yeah, you can take, go to the 10minutetrader.com. You can actually see all of my trades for the whole year so far. From first week of January. Okay, this is cash account. This is a margin account. There is a difference between the two. Cash account, margin account. Every week. Week 1, week 2, week 3, week 4, week 5, week 6, 7, 8, 9, 10, 11. Okay? And the black ones represents profit and losses for the year. So you can actually check all my trades. You can actually go into all the back broadcasts, because I actually have recordings of all the broadcasts. All of them. That's like 90 days of 2.5 hours a day. That's crazy. Okay, I'm on a fixed income. I'm 54 years old with about 30,000. How do I invest? Or how should I invest? Linda, that's a tough question. 30,000 is not a lot. You're 54. I'm 60. Pleased to meet you. However, this here, how are your tax returns with these short-term capital gain? All right, Seth, hold that thought for a second. But Linda, this trading strategy was for my 9-year-old. Safe, secure, predictable, and consistent. Only 1% per week. That's my goal, 1% per week. But KSS warnings didn't impress. All right, Al, which ones are we talking about? Let's go back and take a look. What are we talking about on that information? Okay, more info, company news. Here we go. Company news. What do we have? Kohl's swung to a quarterly profit as it showed a preview of its turnaround strategy to combat slump in sales. That doesn't sound like a bad thing. Earnings. Deals are coming back. These 8 companies are buyout candidates. Ooh, buyout candidates. Poland Capital Portfolio Manager, who expects to buy out targets to become companies of smaller market capitalization. Oh, okay. Harley Davidson, Newell Brands, Victoria's Secrets, Kohl's. Ooh, Kohl's is up for a buyout bid. I found savings account that earns 5%. Linda, we average 50%. Okay, 50%. That's 1% per week. Okay, but did you hear that? You got this big corporation looking to buy out 8 different companies. Okay, Harley Davidson, Newell, Victoria's Secrets, Kohl's, Sarepta Therapeutics, and Quantum Space. Wow. Which have market caps of $1 billion, $11 billion. The trade there, interesting. Now I'm kind of interested in that. Okay, Mikey, you're new here, giving me the elevator small talk on what's going on. Oh, all right, Mikey, here you go. You ready? We invest in dividend stocks for weekly cash flow, safe, secure, predictable, and consistent 1% per week. Averages close to 50% per year, and no risks, depending on how you look at it, of course. Drone Shield is a great penny stock. Right? We don't do penny stocks here. Sorry, only dividend stocks. What's a typical buy-in per trade? 20%. Okay, so if you look back at my trading accounts, okay, you'll notice I only have 4 or 5 positions. So 4 positions at $100,000, that's $25,000 a piece. 5 positions at $100,000 is $20,000 a piece. That's about right. Let's go back to where we were. Whoops. Okay, so that's interesting that Kohl's is up for consideration as a buyout. So it might be something you might want to hold on to depending on what the offer is. Because when Macy's had the offer, you hold swing dividend shares to buy right before the dividend, pay them and unload. Yeah, no, close, but not really. But nice try there, Mikey. Just sit tight. You're new here. Just chill, relax. and you'll see what we're doing. So Macy's a couple of weeks ago had a buyout offer, all right? And Macy's said, hell no, we'll just buy back our shares at 24. Now, I got Macy's at 22. I had no problem whatsoever holding on to Macy's and see what finally happens. I may hold off on selling Kohl's option in case there is a big bounce. Well, it all depends on what that buyout offer looks like. Because right now, Kohl's is sitting at 24.81. Okay, so if you're at 24.81, now I'm into Kohl's at 20, almost 28. All right, I would like to see what the offer looks like. Okay, now I will sell an option against it, and I will collect the dividends next week because the dividends for Kohl's is on Tuesday. All right, so Monday I will sell off. What do you call it? I will sell off a contract for someone to buy it from me. Now, more than likely, I'll sell the 26.5s at 15 cents a share. Now I have 4,000 shares, so how much is that? 15 times 4,000. 1.5 multiplied 4, 1, 2, 3. That's only $600, but big deal. But anyway, that's not the point. The point is there's a bid offer, okay, to buy out Kohl's. I'm kind of curious what it is, okay, but I don't want to stop the cash flow from rolling in. I want cash flow to keep coming in. Do you think new technology companies can become big like Microsoft or Google? Kohl's will sell for 50 cents a share eventually. Well, Mike, then I plan on not selling at all. No, just kidding. I'm going to look for the cash flow. As soon as it hits a target I want, I'm out. I really don't care about pie in the sky, hopeful projections. Okay, now we are going to take a look at Walgreens in a little bit, and I'll show you why I have no problem holding Walgreens. Okay, but not quite yet. We're going to get to that in a minute. But we're still at Kohl's. So yeah, there was some interesting information. Okay, that's probably why the stock is going down. And eventually, when they get to the conference room or the table where they start, hashing out the deal. Okay, we're going to buy it. What are you going to buy it at? What is the offer? What are you going to pay each individual investor? Or are they going to keep it as a what do you call it, a public company, and just roll into new management? Who knows? But it's worth holding on to. At least I'm going to hold on to it until I figure out what's going on. But I am going to continue with the cash flow rolling in. Now, the dividend next week is 2% of the cost. So I'm only looking for 1%. I'm getting 2% on the dividend plus a little bit extra for the premium. All right, so that being said, let's get rid of that. Let's jump off to the next one. Is the goal not to engage in the option contract and hence you receive the premium and dividends? All right, Seth, the goal is safe, secure, predictable, consistent 1% per week. Whether I get that 1% through the sale of an option premium, capital appreciation means the stock moves up, or the dividend, or a combination of any two of the three. Okay? However it works, I really don't care, to be totally 100% honest with you. I take a look at the calendar. Okay, now I look at all the companies that I have in my roster, which are only companies that have 20 years of increased dividends. Okay, who are they? Dividend Kings, Dividend Aristocrats, Dividend Champions. It's 150 companies that have each individually on their own have increased their dividend payments to their shareholders every single year consecutively for 25 years, bare minimum. 25 years of increased dividends. Okay, look at all the companies on my list. Okay, this is just the month of March. This is just this month. Okay, so much easier going this way. This is for the month of February. That's for the month of January. Okay, there's 12 months in the year. You break up those 12 months into 4 quarters. January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter, October, November, December, fourth quarter. One thing these 4 quarters have in common, okay, each one has 13 weeks. Okay, week 1, week 2, week 3, week 4, so on and so forth. Okay, how do you do this wrong? Okay, week 1, Comcast, Cisco, American Express, Bristol Myers Squibb, JP Morgan. Okay, this is, now I have, hold on a second. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have 10 lists. Okay, 10 lists. Okay, the one you're seeing here is just one of those. That's just one of my lists. And each one of these companies have over 100 years of increased, I mean, not 100 years, sorry, 20 years of increased dividends. Any one I have no problem. Okay, so I will buy it before the EX date. Okay, these are all EX dates. Okay, I'll buy the stock before the EX date, and I will look for that 1%. Okay, whether it is premium, whether it is dividend, whether it's dividend and premium, whether it's stock appreciation. Okay, either way, I don't care. I look at the numbers. Certain things I do. SoundHound, no, they're not more than 20 years old. What does EX mean? Oh, all right, Brown's backer. Yes, 4 dates to remember when it comes to dividend stocks. 4 dates. Okay, one is the announcement date. That's when they announce the dividend. The second one is the EX date, or the EX dividend date. That is the last day the stock trades before the dividend's paid out. Okay, that's the second one. The third one, the date of record. Okay, that's usually the day after the EX date. The date of record is whoever owns the stock on the date of record is entitled to the dividend. Date number 4, self-explanatory, payment date, when you actually receive your money. Okay, 1, announcement date, EX date, date of record, payment date. That's it. EX date is the last day the stock trades before the dividend is paid out. That's what those green dots are. Those green dots on the screen are the last day the stock trades before the dividend's paid out. Okay? Thanks for that, Al. So, if I buy before the EX date of any one of these companies, and I sell someone the right to buy it from me for the exact same amount of money I paid for it, that's called a covered call. If I buy it for $100 on Monday, sell someone the rights to buy it from me for $100 between now and Friday, 5 days, that is called a covered call, and I will collect what is called a option premium. Okay, buy right, option premium, covered call, whatever you want to call it. But it's basically what it is. You buy a stock first, sell someone the rights to buy it from you for 5 days. Okay, hit clips. Zillow does not have 20 years of increased dividends. Okay, so please, that's the second time you did that. Okay, the only thing I ask for you guys to remember, dividends. They got to have dividends, and they have to increase for 20 years consecutively, year after year after year after year. Okay, and then they got to have weekly options. Okay, so as I was saying, I buy before the EX date, sell it to someone for basically the exact same amount of money I paid for it, and then I collect the premium. Okay, so what if the value goes down versus up versus stay the same? Okay, Seth, in my house, now remember, this strategy was created for my 9-year-old daughter back in 2008. The number one rule, never, ever, ever buy something you do not plan to hold on to for a long period of time, because you just might hold on to it for a long time. The longest I've ever held anything in my 20 years of doing this was 9 months. And that was last year. Last year was my absolute worst year ever. It was. Thoughts on IEP? I'm not sure they have 20 years, but have been great last few. Well, let's find out IEP. What we're going to do now is we're going to take a look at Yahoo Finance. Okay. And we're going to go into what's called the data stream. IEP. Now, almost any financial website has data stream. You just got to know where to find it. Okay, so here it is, IEP. Why does it say IEPTX? Okay, there it is. ICANN Enterprises IEP. All right, interesting. Now, what I want to do next, okay, is go to historical data. Okay, right over here, historical data. Okay, and then I want to go to historical prices. Click on that, and I want to look at dividends only. And then I want to go to the calendar, hit maximum. Okay. Yeah, these dividends are all over the place. From 1988. Okay. 49 cents in 1988. 89, 49 cents. 90, 49 cents. 91, 49 cents. What does that tell you? They do not increase. Okay, 101 Music. This screen right here is live broadcast on YouTube. So jump on your computer. Oh, excuse me. Jump on your computer and go to youtube.com and you'll see this. Okay, hit clips, NSA. I doubt they're on the list. Okay, so then in 1991, they cut their dividends in half. 2024. Okay, 101 Music right up here. Okay, on my bio, click on my little face right there. They'll go to .10minutetrader.com, and there it actually show you exactly where the link is. Hold on a second. Okay, the 10minutetrader.com. That's this right here. Okay, the 10-minute trader. Go halfway down. See all these little dots. YouTube, Twitter, Facebook, Instagram, podcast, LinkedIn, Patreon, TikTok, live YouTube. Books by James. Okay, where were we? Okay, so in 1991, it was 49 cents. 92, 24 cents. 93, 12 cents. Okay, nothing 94, 95, 96, 97, 98, 99, 2000. Yeah, I'm going to say no. Okay, right there, data stream tells you exactly what the dividends were. Okay, they went from 1993 to 2005. Nothing in between. Why would I want to risk my money put into a stock like this? They can be the best people in the world, have the greatest intentions in the world, but whatever work they are doing is not meeting up to my criteria. My criteria is 20 years of increased dividends. Okay, I'll give you a quick little synopsis. Okay, MSFT. You all heard of this one, Microsoft, right? Okay, dividends only. Okay, all the way back to 2003. Okay, 8 cents, 8 cents, 9 cents, 10, 11, 12, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 62, 68, 75. Consistently going up year after year after year. Okay, Mikey, you're absolutely 100% correct, and I cannot thank you for pointing that out. You are 100% correct. But Mikey, let me ask you this question. GPC, General Parts Corporation, they have increased their dividends consecutively for, I believe, 69 or 70 years. 70 years, every year, higher and higher and higher dividends. Now, do you really want to be the CEO who cuts the dividends on a company that has increased all those years? Really, think about it. 70 years consecutively increasing, okay? Higher and higher and higher dividends consistently over and over and over again. All right, what do you think is going to happen to a CEO who cuts dividends on a company that has paid consistently and increased for 70 years consecutively? Well, I really don't think they're going to be in business much longer. Not in business much longer, but being a CEO. Because the number one thing is investors want consistency in their income. How has the share price done over the 70 years? Okay, Mike, you're asking the wrong questions. All right, we're not looking for share price. So here's another question for you. If their dividend is $1 a year, $1 per share. If I have 100 shares, how many dividends am I going to get? I'm going to get 100 shares. I'm going to get $1 dividend for each one. If I have 50 shares, what am I going to get? I'm going to get $1 a share. However many shares you own, regardless of the price you paid. I'll give you a perfect example. Okay, let's go here and let's go GPC, GPC, or better yet, okay, so GPC, the high of the year is 174.71. Okay, now if I buy at 174.71, what dividend am I going to get? $1 a share. If I buy it at 125, which is the low of the year, okay, high of the year 170, low of the year 120. Okay, 170, 120. If I buy at 170, what am I getting per share? $1 a share. If I buy it at 120, what am I getting per share? $1 per share. What stock do you like for next week? Okay, I didn't get that question. I'll slide down a little bit. How has share price done in 70 years? Does it really matter, Mike? Because what we're looking for is safe, secure, predictable, and consistent 1% per week. I could care less, honestly, could care less what the stock price has done. Really don't. because my main concern is, do they have 20 years of increased dividends? Okay. Do they have weekly options? Okay. Now, I balance up my account every year. I take a look at each and individual stock on my list. If it continues to meet my criteria, it will stay on the list. If it doesn't meet my criteria, it will come off the list. Okay, that's all I'm trying to say. I look at good quality companies, okay, that have increased their dividends consistently and have weekly options. If the 1-year chart looks good, the 90-day chart looks good, the 30-day chart looks good, and the 90 on the seasonality chart look good. If those all look good, then I go look at the numbers. If the numbers make sense, then I'll buy it. If not, I don't. How much do we need for $1,000 a month? $25,000. Are you always reinvesting the dividend? No, Mikey. If you go back to my, what do I call it? Right here. Okay, here. These are all the trades I made. All right, all the trades I made this year. Okay, one account here, one account here. Now, look at this account over here. All right. Cash withdrawal, 1900. Cash withdrawal, 1900. Cash withdrawal, cash withdrawal, 1700. Okay, so I withdraw the money every other week. Okay, so yeah, this account over here always gets reinvested. This one over here to actually take the cash out. So this one over here, the returns would be higher if I didn't take the cash out. But you know, hey, we have to pay our bill somehow, right? Back to where we were. All right. All right, so that was GPC. Now, let's take a look at the next one on the list. NYCB. What are these dividend stocks? I have 25,000. Okay. I have 25,000 ready to go. Oh, all right, Ryan. Well, I suggest, you're both new here. How do taxes work when you file? Okay, Saya, I'm going to let you know. If you have questions about taxes, NUE, my humble opinion. Okay, now I can only give you my opinion, is you need to talk to a tax strategist. What's the capital gains? Huckleberry, you need to talk to a tax strategist to help you set up your account in a way that you're happy with, because my goals are different than yours. Following along, he's live every night. Yep, every night I've been here. Funny thing is, I just learned how to do these live tradings. Okay, these live things. So I've been live since January, every night. Thoughts on SMR? All right, Al, we'll take a quick look at it. SMR. But right now we're going to NYCB. Can you explain an example of one of your last week's trades so that I can better understand your record? Honey, headphone, please. That's okay. Honey just walked in for you guys are following my life story. She had a date tonight with Steve. Her and Steven had a thing going on for how long? 1974? 50 years. Holy cow. Are you guys, who here is still friends with their, hey, Jen just showed up. Hey, Jen. Yep, Honey's had best friends since, what, first grade or second grade?
Preschool.
Preschool? You don't even remember back to preschool. Who are you kidding? Okay, so we're going to actually have our friends over at Instagram join us. Whoops.
I cut off the phone. I'm sorry.
That's okay, honey. Not a big deal. I mean, they're relatively new. I had a title. I spelled it wrong.
Just open up the app.
I am. I'm dividend investing. Oh. Did you guys have fun? Wow. Hey, Mike, how you doing? All right. He doesn't get 1% from solely dividends. He gets it from writing covered calls. Hey, thanks, Winner 86. A dividend. All right. Now we are going to have Instagram join us. Yay! Instagram's joining us. Okay, so the questions. Okay, 1% per week comes from anywhere between the stock appreciating. That's what we're here for, James. Exactly, we're here for 1% Safe, secure, predictable, and consistent, 1% per week. Now, whether it's through writing covered calls, whether it's through capital appreciation when the stock moves up, or whether it's through collecting a dividend, or a combination of any one of the three. 1%. Do I get 1% every week? No, I do not. Let's go back here. Okay. Okay. Week 1, 2%. Week 2, 1%. I'll go back up this way. Week 3, here you go. For those of you who want to pick and bitch and moan, 0.85. 0.85. Not quite 1%. 0.85. Week 4, 0.9. Oh, break my heart, 0.9. Okay. Week 5, 1%. Week 6, 1%. Week 7, 1.9. Week 8, 2%. Week 9, 2.3. Week 10, 4.6%. Week 11, which was this week, 3.9%. So it averages out to 1%. Okay. Is it 1% every week? No. Sometimes it's more, sometimes it's less. But on average, it is 1%. Okay. At total to date in this account, 20% in one account. The other one's 40%. That's freaking crazy. But you guys should check out the numbers. They're right there. I mean, everything is listed right online. You can actually see each and every trade I've done. So you're making 1% of your trade or your entire principal. My entire principal. Okay. So when you look at the accounts, right, which are right there online. Okay. Account number 1 started out with 117. Okay. And I've taken out so far, no, I didn't take out today's, almost $8,000. Okay. Since the beginning of the year. Okay. Account number 2. Okay. 100,000 cash, 100,000 margin. Now, margin is borrowed money, which I have to pay interest on. Okay. But the numbers are all different. But all the trades are right here. Okay. The profit and losses are right there from each account. You can take a look at each one of the stocks that I do. And each and every one of my trades are right there. If you don't believe me, check them yourself. Okay. The timestamps. Okay. 129, which was January 29th. Oh, look at this. 11:30:08. So that's 11. Oh, wait a minute. Sorry. 9:30:08. The market opens at 9:30. Okay. 8 seconds into the day, I've already made this trade, which was 40 cents over that, blah, 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 whatever the hell that was. Okay. I don't keep track of all of it. It's there. Okay. Back to where we were. Okay. Back to where we were. Hey, go Sox. Likes you to show up. There's another guy said he makes money when stocks go down. Yeah, you can make money when stocks go down. There are hundreds upon hundreds of trading strategies out there, literally. Okay, let me open up one right here. All right, you see this window right here? Those are all the different trading strategies with just options. Single, vertical, back ratio, calendar, diagonal, straddle, strangle, covered stock, synthetic, butterfly, condor, iron condor, vertical roll, collar with stock, double diagonal, unbalanced. Then these ones open up even more. Double diagonal, double calendar, straddle, strangle, swap. It goes on and on and on. There's hundreds upon hundreds of trading strategies. Okay? Okay, hundreds and hundreds of trading strategies. However, I teach one. It's safe, it's secure, it's predictable, and it's consistent. Now, the reason why I'm sharing this one with you, okay, I created this trading strategy for my 9-year-old daughter back in 08. Okay, 9 years old. She wanted to know what Dad was doing, so we did something together, just me and her. The boys weren't interested in money for some strange reason. So I had 5 criteria I need to meet for my 9-year-old daughter. It had to be safe. It had to be simple. Remember, she's only 9 years old. It had to be safe. It had to be simple. No possible way she could lose any money. Because what's the first thing a 9-year-old's going to do when they lose money? They're going to cry. They're going to hear shit from her, and I'm going to hear shit from Mom. So, no thanks. So, safe, secure, simple, safe. No way she can lose. Income had to be predictable, and the income had to be consistent. Okay? So, those 5 criteria I had to meet trying to teach a 9-year-old how to trade. It had to be simple. So the only thing simple was buy a stock, sell somebody the rights to buy it from you for the same price you just paid. So if I paid $24.88, okay, this stock right here, Kohl's, Okay, 24.88. The closest option premium would be the 25, right there. That's the closest option premium, 25. And what is that going for? 9 cents a share. So that would be a no. Dividends left. I told you YOLO Turley would be up 16% today alone. Well, good for you. Winner 86. Share the goal with the strategy is actually to lose the shares at a profit. That's correct too. Browns. How do we find these people to sell to? You don't. There's only one person you can buy from. There's only one person you can sell to. And that is the market maker. So if you take a look up here, you have what's called the bid, what you can sell it for, and the ask, what you can buy it for. And who do you think that is? If you go to a grocery store, your corner grocery store, you walk in the store, who can you buy from? The market maker. He buys milk for $3 a gallon. He sells it to you at $4 a gallon. Okay? You can't sell him anything, but you can buy something from him. The milkman will sell the grocery store man the milk at $3 a gallon, and he will sell it to you at $4 a gallon. He's the market maker. That's his job. And what does he make? He makes the difference between the bid and the ask. What you can sell it for, what you can buy it for. Okay, you can't sell it to Peter, your neighbor. You can't sell it for, Jane's sister's brother's cousin, aunt's uncle down the street. You can't. You only have one person you can buy from and only one person you can sell to. That is the market maker. The average retail investor is probably the safest, best way to go. The average retail investor, this is probably safe. Okay, well, the safest thing is just to buy and just hold. That's safest, but you don't get any income from that. Okay, what are you telling your 25-year-old now? What percentage of her income is she gambling versus total market funds? Hey, Mikey, that's a good one. Okay, funny thing is she has nothing to do with the stock market now. Okay, all three of my kids, no interest in money at all, none. My son's a bartender, other son's a cook, and my daughter washes dogs. Okay, I really think they're counting on me to make tons of money and leave it to them when I go. That's my honest, humble opinion. I help my son buy his house. I help my other son buy his house. My daughter's only 25. I'm not going to help her, so she has a choice: wedding or house. And I ain't going to do both. Okay? What's your background? I think they call this. What do they call this, honey? Not a throw. Tapestry. That's a tapestry. And this is my big TV screen. That's what my background is. I'm sure that's not what you're asking. And covered call makes money price go up or down. Well, that's an interesting question because I'm not quite sure what you mean by that. And a covered call makes money price go up or down. I have no idea what that means. How can you make money with option trading? Well, here's one way. You buy it for $1, you sell it for $5, you make money. Or how's this? You sell it for $5, you buy it back for $1. Okay, so hypothetically speaking, when I sell an option, hold on, see if I can find one here. Okay, right here, 24.88. Let's go here. If I sell this one right here, all right, I'll make $490. I'll buy the stock at a certain price, 24. What is it? 24.88. Okay, I will sell someone the option to buy it from me. Okay, at what am I looking at? 24.50. Okay, so they have the option to buy it from me anytime between now, when I buy it, and Friday when it expires. Okay, now each day that goes by, that option loses value. That is called time decay. Okay, so time decay slowly ticks away. So if it's worth $1 today, by next Friday, it will be worth 1 penny. What's the point of dividends if they get double taxes? $1 million trader Dan. Hey, this is like this. You've been here before. I know that. But here's an interesting question. It brings me back to a situation where I was working for this guy doing handyman work. And I kept telling him I needed to get more money because the gas prices kept going out and expenses kept going higher. He said, what you need to do, you need to earn more money. That's it. If you're worried about taxes, you need to make more money. And then you need to talk to a tax strategist. Because if Warren Buffett pays less in taxes than his secretary, what is he doing that you're not doing? Okay? If Donald Trump is a billionaire and he pays less in taxes than most people, what is he doing that you're not doing? Can this all be done on E-Trade or something else better? Well, I use Thinkorswim, which is owned by Charles Schwab. Okay, I also do this in Robinhood. What do you think about holding money in areas and Hercules Capital? I'm going to say no because I have no idea what they are. Fidelity, Rob, I have no idea what Fidelity is. I have no idea what their trading platform looks like. Okay, I like Thinkorswim trading platform because it has everything I want. It has the trigger trade, which allows me to do 2 trades at once, and I don't have to be there. You know, I can buy and sell at the exact same time and just let the computer do it for me. Okay, now also have the seasonality charts, which I remember when they first came out. Awesome. Why are they awesome? Well, the blue line represents this year. The red line represents 10 years worth of data. Okay, that's 2014, 2015, 2016, 2017, so on and so forth. Okay, it allows me to see when does the stock usually move. Now, a stock like this, GPC, it doesn't do anything. It basically just goes sideways. All right. Okay, that tells you stability. There's no big peaks. There's no big valleys. You got to ignore this one right here. This is March 21st. You're going to have that anomaly for another 7 years because that's when the pandemic was and everything dropped. Millionaire dollar trade. No, I don't trade every day. I don't. I do it Mondays and Fridays. Mondays, I spend all my money, invest all my money. Fridays, I balance out and see what's happening. I am trading in Fidelity Roth, but use Thinkorswim for my main account. Way to go, Al. What else were we looking at? Okay, so that was GPC. Who's next on the list? NYCB, New York Community Bank. NYCB. I bought this one just for the fun of it because the numbers looked interesting. NYCB. Now this was pure gambling, okay? Pure gambling, this one. Alrighty. What is your edge when you are trading options? Okay, I can't pronounce that name. Alright, hold on a second. Mikey, please tell the young ones about Roth IRAs and how dividends are our ultimate hack. Okay, interesting, Mikey. Yeah, Roth IRAs are cool because you put the money in and it grows tax-free. But Mikey, I'm assuming if you like that idea, you're not very familiar with the federal government and how wonderful they are on not tapping into money that doesn't belong to them. You know, they borrowed money from Social Security. It's not their money to borrow from. Okay, they don't get me started, really, because if you honestly think that they're not going to figure out a way to tax a Roth IRA somewhere in the future, I don't know what to tell you. I don't trust the government as far as I can throw them. What is your edge when it comes to trading options? Okay, I can't even read that. How do you pronounce that name? Quiescene Player One? Is that right? Quiescene? All right, whatever. Anyway, my edge on trading options. Well, all right. Interesting thing about the stock market. Okay, when you open a trade, you have to close a trade. Okay, because when you get into one, you have to close it. Buy to open, sell to close. Sell to open, sell to close. You can do it backwards. You can sell it first and buy it back later. All right. Now, when I buy a stock, I buy it to open, whatever I buy it at. Okay, let's say I buy it at $50. I buy it to open. Eventually, I have to sell it in order to close that position. Now, with an option, I'm selling time, something that nobody controls, and you can't buy it no matter what you do. Okay, all the money won't another minute buy. Was that Seals and Crop? No, Crosby, Stills, Nash and Young. I don't know. Anyway, all the money won't another minute buy. I forget the exact name of the song. Dust in the Wind. Okay, dust in the wind. All we are is dust in the wind. All your money won't another minute buy. You can have all the money in the world and you cannot buy time. I am selling time on an option. Okay, if I sell it for $5 on Monday, my assumption or my edge is that by Friday it will depreciate in value enough that I can buy it back cheaper. I was trying to show the missus this morning when I was doing my trades on Robinhood. Okay, what happened there is I was buying back options at penny a piece, 2 cents a piece, 5 cents a piece. Okay, but I was turning around and selling next week's for $1 a piece, $2 a piece, 75 cents a piece, so on and so forth. Okay, so I will sell, okay, and then later on I will buy it back for less on Friday. Okay, so I buy it, I sell it for $1, I buy it back for a penny or 2 pennies or whatever it is on Friday, because when I buy it back, I sell next week's option for $1 or $2, whatever. And then next week, I'll go and I'll buy it back for a penny or 2 cents. But it's a constant, never-ending scenario. Miss Elizabeth, you're back again. You were here before, because I remember Miss Elizabeth. Oh, Pam joined over here on Instagram. Hi, Pam. Why aren't we on over here? Well, that's why it's almost dead. Okay, and don't allow. YouTube, there we go. All right, so does that answer that question? We're looking at NYCB at the moment. Righty, I can't do title. No title. Okay, done. I have no idea how long this is going to ask. No, it's not made for children. Next. Oh, I got to smile for this one. I don't know why they do that. YouTube makes you smile for the camera and before you can turn on live. All right, off to the races. I generally sell monthly and close at 50% profit. Cool. I usually sell weekly and buy back at 80 to 90% profit. I don't know, but you know what? If it works for you, this is what I tell people. If what you're doing works for you, fine, stay with it. Okay, this is just a different opportunity, or a different, what do you call it? A different way. Let me say there's hundreds of ways to skin a cat. Crappy analogy, but it is what it is. Okay, what we're looking at here is NYCB, New York Community Bank. I don't know where it came from. Somebody suggested it last week, and I took a look at it. And I said, you know what? Let me buy some just for the fun of it, see what it does. Because a lot of interesting things were going on. A year ago, we're at $6.72. The high for the year was $14.22. Drops, and then here we go, January 29th. It goes from $10.50, drops all the way down to $6. Now, $6, she kept on going down. She gaps down March 1st and goes sideways. So, where are we? Right here. Last 30 days. Okay, we're at 487. Got a 30-day high at 501. We hit the 29th. It ended up at 479. Very next day, she gaps down to 346. Ouch. Now, from there, we have a 30-day bottom on the 6th, and that was $1.70. What has it been doing since then? Well, we're sitting at $3.90 at the moment. Okay. What's the symbol? The symbol is NYCB. I thought the option expired worthless and you didn't have to buy it back. Oh, Tino. Now, it depends on which brokerage you use. Thinkorswim, they can expire worthless. You don't have to buy them back. But on Robinhood, Robinhood will not let you have the options expire worthless. You actually have to buy them back around If you don't buy them back around 3:30, they will buy them back for you, and they will not give you a favorable fill. So, yeah, around 9 o'clock this morning, well, not 9 o'clock, 10 or 11 o'clock, I was sitting there, buying. See if I can find it. No, I'll show you another time. But yeah, dependent on the trading platform. Okay, Thinkorswim lets them expire worthless. They don't have to worry about it. But Robinhood, considering the trading is free, they have to make their money somehow, so they do it. Is there a reason why they do that? Well, my assumption is they get a commission when the trades go. Okay, I don't know how much of a commission, but it's a very small one. But the amount, if everybody has to buy them back on Friday, they get 1 or 2 cents from every single contract. When do you buy options instead of selling? That's on a Friday. Okay, I sell them on Monday. That's when I get the highest value because my money's invested at all times. Okay, 98% of my money at all times. All right, I leave 2% in reserve in case I have to buy something back on Friday. Friday comes around, I take a look what the numbers are. What did I sell it for? What is it worth now? Okay, I can't show you right now because my phone is right there. Okay, that's my phone right there. That's where I do my trading. But yeah, normally I do my trades on Monday and Friday. Okay, so NYCB. Yep. Okay, where am I with NYCB? Huh. Okay, hold on. There it is right there, NYCB. Now remember I told you I got 5 accounts, but I only share 2. This isn't one of those accounts. All right, so I bought 100 shares at $3.59. NYCB, not a big deal. Yeah, so I bought them at $3.59. Okay, $3.59 per share. All right. I sold the $3.50 call, which means I sold somebody the right to buy it from me at $3.50. Are you concerned about the volume in the option? Is there even low liquidity? That's an interesting question. No. Remember, this trading strategy was created for a 9-year-old. You guys are asking questions that would confuse a 9-year-old, so no, I don't worry about them. Can you break it down for a new person into stocks? All right, Tony. Okay, the one we're looking at right now. Okay, this screen right here is being broadcast live on YouTube. You'll be able to see the numbers a lot clearer on YouTube on your computer than you will right here on your phone or your tablet or whatever. However, this company wasn't on my list, and it probably never make my list. But somebody mentioned it last week. One of you guys in the audience mentioned it last week. And I was looking at the numbers, and I was looking at the way it was moving, and it was like a no-brainer. This thing was going to go up. Okay, fine. So I bought some at $3.59. Okay, $3.59. I sold it. I sold somebody the rights to buy it from me at $3.50. I would be losing 9 cents. Okay, so I'm losing 9 cents. But the option that I sold was worth 21 cents. So what was my profit? If I sold it for 21 cents and I'm losing 9 cents, okay, my profit would be 12 cents. Now, I know 12 cents does not sound like a lot of money. Okay, I know it does not sound like a lot of money, but let's divide it by what I have into it. $3.50 per share. Okay, I divide it by $3.50 per share, and that comes to a grand total of 3.4% for that trade for the week. Okay, buy it on Monday at $3.59. I sold someone the rights to buy it for me at $3.50. Okay, the stock is at $3.90. So I get called out, so I'm back into cash on Monday. But I made 3.4% for that one trade. Now, normally I wouldn't do a trade like this, but it was such a point where, it was blatantly obvious that it was going to go up. So I did. It was strictly gambling, and I admit that. Normally I wouldn't do it, but I did just for the fun of it, and I only bought 100 shares, so big deal. All right, let's get back to where we were. Okay, that's NYCB. Next on the list is Paramount. Joe, hello. Do you ever just buy options and not the one? Wait a minute. Do you ever buy options, not the ones you sold? No. Okay, now I do in other accounts, but this strategy, this account here, I share 2 accounts with you. That's it. I have over 5 accounts. I only share 2. 2 of them do the exact same thing. Okay, a simple trading strategy. When do you do dollar cost averaging? I do dollar cost averaging twice, and if the money's available. If it's not available, I don't do it. I did the same exact thing with outside. Al, it was too tempting to pass up, wasn't it? It was there. It's like, hey, here's free money. Come grab it. I said, okay. Anyway, so no, I don't buy options in this account. This account is supposed to be specifically safe, secure, predictable, and consistent. Okay? It's a very simple trading strategy. When you add other strategies or other twists and turns to it, it's no longer simple. Okay? So, 9-year-old little girl had to be simple. It had to be safe. No way she could lose any money. The income had to be predictable and consistent. Those are the 5 things. You blame Mikey for that one. I don't know, Mike G, are you the one who suggested NYCB? Someone suggested it. Is the current market favorable for this strategy? You mentioned 1 year wasn't great. Well, why? Well, I got bit in the ass 3 times. Austin, my friend bought some weekly calls on a stock. They were a little in the money. Okay, I'm not quite sure which stock that was or why he did that, but I don't buy calls in this strategy. And Isaac, what do I mean by that? Okay, let me quickly show you. TGT, target. Okay, this is the chart for target. Okay, just to show you that I'm not right all the time. I do not make money all the time, but I do average 1% per week. Okay, when I say never buy something unless you plan on holding it for a long period of time. Never. Never buy something unless you're okay with holding it, because the stock will go down. What do stocks do? They go up, they go down. They go up, they go down. They don't do anything else. They don't come to your house, water your garden. Okay, they don't weed your plants. They don't take out the trash. They don't do anything but go up and go down. That's all they do. Okay, so I bought Target right here in July at 135. Now, let me go through it with you so that you understand what happened. Okay, right here in July, right there, 135 to right about December. Was it in December? Yeah, right about there. Okay, this is, wait a minute, I raised to put covered. Why said I have a chance to lose equivalent of 100 stocks. Okay, I have no idea what you're talking about, and I understand they don't allow you enough characters here to ask decent questions. But let me explain. I don't know who asked this question, but let me explain to you what happens sometimes. Okay, now I lost 3 times last year. I think you need glasses. Yeah, I do need glasses, and I do have glasses. But thank you for that. Not that I'm self-conscious as it is. Squirrel, yeah, squinting a lot. Well, yeah, that's because all right, I'm back here reading everything, and I can read the chart fine, okay? But the questions are coming up on the phone all the way there, okay? So that's like 3 feet away, and I'm old. I need to move up to read them, okay? So I do wear glasses, but it's for seeing far away. Put your glasses on. It will make you look smarter. Trust me, I'm not that smart. 86, yes, they told him that paying because he didn't sell before the close. Okay, Austin, okay. Is USB on the list? Well, let's put it on the list. USB. USB. All right. Do I have a pair of glasses? Are these mine? Yes. Are these mine? No, these ones aren't mine. Those are the wife's glasses. Mine are in the other room. And they're for driving, seeing far away. Keep going. Target story. Okay, my target story. But you don't have to sell it. That's why James says buy the stock you're comfortable with holding. That's exactly why I say, okay. All right. So I bought Target here at 135. Okay. You know how I'm pointing way up here? Yeah. All right. Follow the little dot. Okay. So I bought it at 135. I sold a nice premium, got somewhere around 2%. A week later, it's at 130. $5 loss. But I didn't sell. I still sold the 135s because the 135s was still giving me an income. Okay, a week later, we're down to 125, $10 below what I bought it for. I can't sell the 135s anymore, so I'm selling the 130s. 5 strikes out of the money. If you understand what a strike is, then you'll understand it. Okay, now I'm not getting a full 1% anymore. I'm getting like a 0.75%, 3/4, like 0.75. Okay, then she drops down even further to 120. It's $15 less than what I paid for it. Now I'm selling it at the 120, 125s, 126, somewhere in that area. I'm only getting like a third, like 0.3. Okay, then a little bit later, 111. Okay, I still own it at 135. Okay, it's $24 loss so far, but I didn't sell it. Why? Because never sell for a loss. Always buy something you don't mind holding for a long period of time. Did I feel that exact same way when it hit 103? Wait a minute, what was the bottom? The bottom was 102.86. Okay, the bottom, 102.86. How do you think I felt? I had it at 135, and now it's down to 102. Okay, that is $33 less per share that I bought it for. Okay, $33 per share, 1,000 shares. That's $33,000 loss. Okay, right there. Did I sell it? No. I should have doubled down. Mikey, you think I have a bottomless pocket. I don't. Okay, I had 6 positions that week. 6 positions. That one was down. Okay, the other, well, that one was down, and PPG was down. Okay, so I had 4 positions carrying me over, still making over 1%. Okay, so 102 right here. Okay, a couple of weeks later, she goes back up, and I'm starting to sell the 115s, 118s again. Okay, still making 1/4%. And then here we go. Here's the part where bit me in the ass. Yeah, bit me in the ass. You dance to the music long enough, you're going to pay the fiddler. Okay, so November 14th, right here. November 14th. LA Soundwaves, how's it going? Okay, so November 14th. It's at 110. Remember, I got it at 135. It's down at 110. And I'm selling 4 strikes out of the money. I'm selling the 114s. All right. I sold them for like 50 cents. What happens the very next day? It gaps up. Did it gap up a little? No. The little bitch went up $16. $16. So that 50-cent dividend, that's 50-cent premium I sold, that call I sold for 50 cents, is now worth 12 bucks. I had to buy it back at $12,000. I lost $12,000 overnight. Right there. Boom. 12,000. Well, why didn't I sell the stock? Well, because I'm selling the stock at 135. Had I sold it, I would have lost 25,000. So, do I pay the 12,000 and saying, all right, I danced to the music, time to pay the fiddler? I did. Okay. Now, I still held on to it, and I finally sold it in December at 136, more than what I paid for it. Okay, so stocks go up, stocks go down. And if you play this game long enough, you are going to get bit in the butt because nobody ever knows when a gap up is going to come. Never. You never know. So I lost 3 times last year. Target, PPG, and Target, PPG, and what was the other one? Bristol Myers Squibb. No, sorry, Kimberly-Clark. That's some BS. Well, I'm not quite sure which part is the BS, me losing the money or you don't believe the story. You know, it is what it is. Do you pay the 12 grand to the fiddler or do you run and hide and lose the 25 grand? Okay, that's a choice. 12 grand, 25 grand. Is winner 86? Yes, USB is on the list for this week. You losing the money? Well, yeah, it happens, you know, but take a look at it this way. I didn't lose for the year. Okay, I think I only made like 40% last year. Okay, didn't make my 50% last year, but you know, is what it is. You know, the only other way would be to stop writing covered calls, right? Well, Mike, that's you know, like I said, I had 6 positions. Okay, so I have 6 positions, each one giving me over 1%. Okay, now, if you guys actually want to hear the story, right here, the podcast. Okay, you click on the podcast, and it takes you to, oh, look at that, Dividend Stock Talk. Okay, all these, there's like over 800 of them. You can go back to, when was it? More episodes. When was that? July 2023, September, August, July. Monday made a bunch of companies look, blah, blah, blah. Tuesday had great play. Thursday, double-edged sword. Triple play possibilities. 3 hot stocks today, blah, blah, blah. Got plenty this week, blah, blah, blah. I don't know exactly which day it was. Okay, but as you can see, there's over 800 entries. So I do a podcast every day. Okay, they're all right there. You can listen to them. They run anywhere between 11 minutes to 45 minutes, depending on what happens that week. Okay, Frank, tax liability. If you're worried about tax liability, you need to either make more money or talk to a tax strategist. What's your most profitable stock? Well, it depends. I was looking at the EX date, but I seen the stock goes down around that time, so it's not that easy. Okay, Volo, you're not paying attention. Do you trade live online, Mikey? Yes, I do. Monday, Tuesday, Wednesday, Thursday, from 9:15 a.m. That's 15 minutes before the market opens until 10 o'clock. Okay, there's a group of about 12 of us at the moment, so we're gathering more guests, so to speak. And on Friday, we're on at 3:30. Okay, from 3:30 to 4, so we can check all our positions to make sure, do we have to buy something back, make adjustments, whatever. But if you want, where are we? Get out of that and go back to here. Here we go. Right there, live trading. You click on that. That will take you over to Patreon, and you decide whether or not you want to join us. Okay, where are we? Back to where we were. Okay, so, yes, eventually, unless your last name is Pelosi, you are going to lose once in a while. Okay? What would you do with this strategy in a bear market? Okay, Isaac, you're forgetting something. Never buy something unless you're planning on holding it. And if you buy something, make sure they have increased dividends every year, higher and higher dividends. There's over 150 companies that increase their dividends for more than 25 years consecutively. Okay, so if the market goes down, you're still getting higher and higher dividends. And you can still sell covered calls in case a smaller premium. But you got to keep your eye on it and be wary of this scenario. Okay, because this does happen. I'd say in the last 20 years, it happened to me 4 times, 5 times maybe. Okay, where were we? Oh, NYCB. Yeah, so anyway, NYCB. Okay, so we were looking at this a couple of weeks ago, and we saw this big, huge gap down. Then we took a look at the news, and the news, what the news said was, it looked like the FDIC was going to come in and take over the bank. Okay, they weren't going to close the bank. Okay, the bank was going to stay open, but they were just going to, get rid of the, I think it said something about the corrupt players in the bank and replace them with halfway decent people, but they weren't going to close it. So I said, okay, well, after reading the news, I said, well, let's buy them. So anyway, I bought some just, to play with it. That's NYCB. Next on the list, Comcast. Now, Comcast does not have 20 years of increased dividends. They were back, I think they started in 1964. So why is Comcast on my list? Well, Comcast is on my list because they have 65 million people, 65 million customers paying them a monthly income, a monthly fee, 65 million. Okay, that's a lot. Okay, so yeah, let's take a look at Comcast. CMCSA. CMCSA. And one more time. CMCSA. Here we go. Okay, so Comcast is the first week of the quarter. Okay, so Comcast, first week of the quarter, April 2nd. Okay, we are in this week here. Okay. Next week, look at 2 weeks ahead. Okay. So usually I'd buy it 2 weeks, but for some strange reason I bought it this week. Okay. What would you like the bear strategy? Okay. Blah blah blah. Okay. Anyway, so Comcast has a dividend of 31 cents. Not life changing. Okay. So let's take a look at the numbers. A year ago today, right? A year ago today, we're at the bottom of the year. Okay, that's the low of the year, a year ago. Okay, the high is right there. Can you look at Lion? I don't know why they're not on the list, but to make you happy, I'll take a look at it. Okay, so Comcast, a year ago today, was the bottom of the year, 34.66. The high of the year was in mid-August at 47.51. All right, so last 90 days. We go back out to November right there. 90 days ago, this is the last 3 months. This thing basically just goes sideways. Got a little bit of a peak there, but basically sideways. No huge movements. Okay, 90 days ago, we're at 42.34. We're at 42.77 now. Can you explain continuing to sell covered calls while holding the stock? All right, Jim, we'll take a look at that in a second. KWeb. All right, now, Quaisanine Player 1. Have you checked to see if KWeb has dividends? And do they have weekly options? And if they have dividends, have they increased them for a long period of time? Can you buy the stock on the EX date and receive the dividend payout? It's on or before. Okay, either early in the morning or before. 1 day, 3 day, 5 days. Mikey, I have no idea what you feel, Mikey. All right. I feel like, all right, whatever. All right, so Comcast, 90 days ago, 42. All right, and a double high at 47, and that was the end of January. Okay, so the last 30 days. Last 30 days, Comcast was at 41.78. The 30-day bottom was 40.74. Right here. That's the 30-day bottom. The 30-day top, right here. So you might be asking yourself, why did I buy it? I'm asking myself that exact same question. Well, I'm buying it because of 65 million customers, paying them every single month. That's nuts. 65 million. Anyway, so the 30-day top right here at 43.68. So I got in at 43.42, which is right about here. All right, now I sold off the, all right, hold on a second. I gotta actually open this up so I can actually look at it. Okay, 43.42, and I sold the 43.50s. I feel like dividends and options are completely different ends of the spectrum of trading. Well, they kind of are. Options expire, and stocks don't expire. Dividends are just a portion of the profits. It's like 3 items. You have a dividend, you have stock, and you have an option. 3 totally different things. Okay, dividends is your share of your profits. Options, something gives you an option to buy and not buy. By a certain time, by a certain date, and they expire. Stocks, they don't expire. I mean, you can have stocks from 100 years ago that's still valid. Do you have a scanner to get a list of stocks paying increased dividends? Well, you don't really need it. Okay, you just go to, we haven't done this in a while. We'll go to Google. Okay, Google Dividend Kings List 2024. Oh, look at that. Top right there. 55 Dividend Kings. It'll give you the list. You click on it right here. Click. And it'll take you to this website right here. Sure Dividend. Okay, 2024 Dividend Kings List. Wait, hey, I'll do this for you. You guys ready? Hold on. Okay, Sure Dividend. Okay, 2024 Dividend Kings List update daily. All 56 analyzed. Right there. Google. Okay, so let's go back one. Okay, look at that. You put your email address, they'll even send you a list. They'll send it to your email. Okay, let's go back one. And let's look at Dividend Aristocrats. Oh, what? That's the Dividend Champions. Hold on. I'm jumping the gun here for a second. I hate when they do that. Clickbait crap. Cover. Sure Dividend. Here we go. Okay, look. Dividend Aristocrats. 68 of them. 25 years of increased dividends or more. Okay? Now, what was that next one? Okay. Same company, Sure Dividends. All 150 dividend champions. Dividend champions, 25 years or more of increased dividends. Right there, just gave you 3 lists. Okay, Dividend Kings, Dividend Aristocrats, and Dividend Champions. That's almost 200 stocks right there for you to start with. Okay, so let's go change this because it's backwards. Okay, 3 options that you were speaking about. Does it has to do with Trey as well? I have no idea what Trey is. Again, please. Yeah, no. Watch the replay. Okay. All right, so where are we now? Comcast. Let's finish up with Comcast. So anyway, Comcast is sitting at $42.77. Okay, I bought it at $43.42, sold off the $43.50s, collected 53 cents. That's more than 1%. Well, guess what? Now it's down to $42.77. Okay, so what is the $42.50s going for? I probably won't sell that one. I will probably sell the 43s for 46 cents. Okay, right over here. Okay, this is what the option price. This is what you could buy it for first thing Monday. 43 bucks. Okay, the last price $42.77. The bid $42.54. The ask $43. If you want to buy it on Monday, you're going to pay $43. If I want to sell someone the right to buy it from me at $43, that's 46 cents per share. Now, 46 cents per share is more than 1%. So 65 million people. How can you go wrong with Comcast? I buy Comcast at the first of the quarter every year. Ooh, let's take a quick look. Right here. Look at that right there. Comcast, January 2nd, 2024, 11:51 a.m. Covered call. Buy 600 shares, sell 6 contracts. Okay, I bought it at $43.85 and I sold the 44s. And I got 32 cents. Per share, whatever. Okay, week number 1. No, was that week number 2? No, that's week number 1. Okay, and I bought Comcast again. Imagine that. And then you'll see in the next few weeks, I'm going to be looking at these exact same stocks because that is week number 1 of the first quarter. Week number 1 of the second quarter is 2 weeks away. You'll see the exact same stocks all over again. Then you'll think to yourself, oh, damn, this is boring. It's the same things over and over again. Well, yeah, it is. I'll do Comcast 4 times a year. First week of the first quarter, first week of the second quarter, first week of the third quarter, and first week of the fourth quarter. Okay? If I get 1% every single time I do it, that's 4% right from Comcast alone. And then what else do I have? Ford, okay, LUV, what is that? Southwest Airlines, General Motors, CVS. You guys heard of all of those. Okay, same stocks over and over and over again. These are the ones I'll probably be buying in 2 weeks. because it's the same stocks over and over and over again. Why? Well, because they consistently increase their dividends. And if the stock goes down, I'm going to get higher and higher dividends every year. Okay, we're at 10:30. We've got one more hour to go. Imagine that. What did you do for a career? I did manufacturing. I had a manufacturing company. I'm actually going to start another manufacturing company because I'm bored sitting at home doing nothing. Drives me nuts. WBA. All right, so somebody wanted to know, what do you do when a stock goes down or you hold it for a long period of time past the EX date? Well, I have a perfect example. Walgreens, WBA. What do you think of prop combines? Never heard of it, Lisa. Terribly sorry. I have no idea what it is. All right. That was Comcast. WBA. Here we go. WBA. All right. So, Gina, happy Friday. JB Berries, Lisa. They give you the buying power, and if you pass their challenge, you get real payouts. Well, sounds interesting. Why don't you send me the information? I'll take a look at it. Right now, let's take a look at WBA. Somebody asked the question, what do you do when a stock has for a long period of time? Okay. WBA. Okay, this is the month of March. Nothing there. 101 Music Machines. I have no idea that. My employer, Sinotrend, former Bosch, is going on the market 1225 to make Ferrari Farmer packaging. Okay. Trade funder I was interested in. Okay, sounds interesting, but I can use Sterling Trading Okay, Pro. I have no idea what that is, Lisa. Really don't. I've been doing this for, oh my goodness, almost 20 years. They have an old saying, if it ain't broke, don't fix it. And I love that theory. I really love my Windows 95. Where are we on, Windows 11 now? I like Windows 95, and they had to go screw it up to whatever it is now. I actually kept the hard drive from my Windows 95. I had pictures of the kids while they were growing up. That's one of the reasons why I kept it. Okay, so WBA. Okay, it doesn't have dividends this month. Hello, dividend guy. Hey, Forever, how you doing? Okay, so we're looking at the month of March. There's no dividend here. So why do I have Walgreens? Well, because I bought Walgreens. When did I buy Walgreens? February 5th. Okay? February 5th I bought it. I sold an option, sold an option, sold an option. I doubled down, sold. Okay, and I still own it. On WBA, 2050s calls gives you 1%. Yep, I'm into, what am I into this one? WBA. All right, I'm into Walgreens at 2162. All right. I originally bought in the beginning of February at 2246. And I doubled down at 2092.93. So now my average price is 2162. Okay, so if I sell off the 2150s, the 2150 is going for 19 cents. That's less than 1%. However, I've still collected. How many have I collected so far? Okay. I keep getting this wrong. Okay. 22.50. All right. I got 35 cents a share, which is more than 1%. 22.50, 20 cents, less than 1%. 22, 12 cents, less than 1%. 21.50, 17 cents, less than 1%. 21.50, 35 cents. 21.50, 46 cents. 22, 27 cents. Well, more than one, more than one, more than one, less than one, less than one, less than one, more than one. Okay, so you add those all up, plus you add the dividend in there, because remember, I collected the dividend. Now, the dividend was only 25 cents, but you still added in there anyway. So how long have I owned it? From February, first week of February, first week of March, probably, well, I'm actually getting that old. I actually got to count. 1, 2, 3, 4, 5, 6. 6 weeks I've owned it so far. Next week will be week number 7. Okay, so I've collected 6 premiums and 1 dividend. All right, now I can pretty much guarantee that's more than most dividend investors get, because most dividend investors just collect the dividend, that's it. But I got 6 premiums. Okay, 4 of them are over 1%, 2 of them are under 1%. Okay, and I collected the dividend. So eventually, when I finally sell Walgreens, I'll do a cost analysis, what it cost me, all the dividends I collected, all the premiums I've collected, and give an idea, and then divide it by 7, 8, or however many weeks I've held it to see if I average my 1%. But until then, I don't know. But I know I'm over 1% on this one, because we can actually add it up real quick. Clear. Okay, 0.35 plus 0.2 plus 0.12 plus 0.17, back up, plus 0.17 plus 0.35 plus 0.46 plus 0.27. Now those are all the premiums plus the dividend plus 2.5. That equals a grand total of 217. I know that doesn't sound like a lot of money, but we're into it for 6 weeks. So we're going to divide this by 6, and that equals that doesn't work, right? Oh, 3/6. Okay, and we divide that by the purchase price. The purchase price average was, what was the purchase price? Hold on a second. $21.62. Okay, we divide that by the purchase price, 21.62, and that gives me an average of 1.6% per week for 6 weeks. Okay, now ideally, next week will be week number 7. I will add the dividend in again, do the same mathematics, and figure out on the 7 weeks what is my average weekly holding on this one. If someone exercised the option, would you have to sell, right? Yeah, as soon as you sell the option, okay? Now, Walgreens, if I sell the 21.50 option first thing Monday morning, I collect that 19 cents right away. That's my profit to keep. Whoever bought that option has the right to do whatever they want with those stocks between the time they bought that option until that option expires, most likely Friday afternoon. So if the stocks go up, more than likely, they're going to buy it. And then you would be out those shares at the price that you agreed to sell it to them for. So it's very important whenever you sell an option to make sure that the numbers work. Make sure that you're getting your money back, number one, and you're getting a profit. Ideally, 1% or more. That's why I say, we look at the calendar first, the calendar first, the 4 different charts, the yearly, the 1-year chart, the 90-day chart, the 30-day chart, and then the seasonality chart. Then we look at the numbers, do the math, take out the calculator. What am I buying it for? What am I selling it for? What is my profit? And what return am I getting? But you need to factor profit and loss on original buy, don't you? Exactly. So you take out, what did you pay for it? Right? So if I buy Walgreens first thing Monday at $20.89, and I sell someone the right to buy it from me at 21, right? The price right here, $20.89. If I buy it first thing Monday morning, I can sell someone the right to buy it from me at 21, which is more than what I paid for it. and I would collect 35 cents per share that instance. Now, whatever the stock does between Monday and Friday is no longer in my control. Whoever bought this has control over it. So if it goes up to 25, whoever bought this can buy it from me at 21. I will collect the premium, which is 35 cents a share, and I will also collect the difference between the 20.89 and the 21 strike price, which is another 11 cents. So it always comes down to the numbers, and you have to learn how to do the math on the numbers. What did I sell the option for? What did I buy the stock for? What is my return on my investment? Okay, Poseidon, did that make sense? Okay, when you say you have to factor in the P&L on the original buy price. Yeah, that's correct. What is the original buy price? And it all comes down to the math. All right, that's Walgreens. All right, somebody mentioned NSA. When you trade goes against you and you keep selling more weekly calls, which strikes do you choose? It's an interesting question, Jeff. For Walgreens, okay, this trade right here I just showed you, my original purchase price is $22.46. So I sold at $22.50. All right, and I got 35 cents a share. The next week it didn't hit my target, so the next week I sold at $22.50 again. I got another 35 cents a share. Didn't hit my target. So week number 3, I sold at $22.50 yet again and only got 20 cents a share. Okay, the stock price went down. So the next week I sold the 22 call, okay, which is less than what I paid for it. All right, and I got 12 cents a share. But you add all those up together, 35, 35, 20, and 12, add them all together and you divide it by how many weeks that is. That's 1 week, 2 weeks, 3 weeks, 4 weeks. Okay, that's my rate of return. And then when I buy more than dollar cost average down, then the math changes. I assumed it dropped. If it risen, why don't they exercise their option price? I have no control over whoever bought the option, what they do. Because sometimes, I've seen it happen to me several times, where somebody would buy an option, let's say they bought the $22.50, right, and the stock went up to 27, or wait a minute, went to 23, right, and they decided not to exercise their option. It's their choice. They do not have to exercise their option. It is the right, but not the obligation that they're buying. They have the right to buy it or sell it, but they're not obligated. Now, a put option, you're obligated to sell. You have no choice in the matter. So when Target was down, wasn't it risky to keep doing covered calls? Yes, it was, Jim. And I say that over and over again. Okay, it was risky. And that was a risk that I was willing to take because I've been playing this game for almost 20 years. And I think I got burned like 4 or 5 times maybe. And it was twice last year. Target, and there was another one. I forget what the other one was. But you can't, nobody ever knows when a gap up is going to come. Sometimes they never happen. Sometimes they do. But that's a chance you take when you play the game. Now, I could have held on to Target and not sold covered calls against it and just waited for it to recover. But I chose not to do that. And that was my choice. I was taking the risk. So I'm responsible for that. So anytime you sell an option that's lower than the strike price in which you paid for it, that's something you, as the trader, have to figure out on your own. Is the risk worth the reward? Okay, if the reward's not worth the risk, then don't do it. Do you collect premiums either way, even if the option expires worthless at the end of the week? Yeah, as soon as you sell the option. As soon as you sell the option, you collect that premium right away. That's your money to do whatever you want with it. Okay, I sell on Monday, I collect all that premium on Monday. I can go out and buy me a nice steak dinner or pay my bills, one or the other. But come Friday, then I have to decide what's going to happen. Are they going to get called away? Do I have to buy something back? That's why it's very important to take a look at on Friday afternoon. I look at 3:30 every Friday afternoon. And the words get stuck in my mouth. I just got to spit them out and just start over again. So at 3:30 Friday afternoon, I jump in and take a look. Yeah, what is it doing? Hey, Jen. Hi, I have a question for my mom who's sitting here. Well, all right, Mom. Did you tell your mom you're out of the closet? It's okay. It's all coming together. Maggie, take your time. Don't be in a hurry. Say that 3 times fast. Yeah, it's funny. Single leg call or covered call, which is better? Oh, well, they're kind of like the same, because a single leg call, you only have one leg, which could be the option. You know, a covered call, basically you have the stock and you have the call that goes with it. It's still one call. Can you please explain premium to her? Oh, tell her it's like layaway. You go to Walmart, you see this, beautiful purse that you like, and it's like layaway. You put, let's say the purse is $100, and you put $10. That's layaway. Okay, same thing. Like the stock, you buy the stock and you sell someone at the premium. They give you the premium. The premium's kind of like layaway. Does that make sense? Okay, and if she has to come back to pay for it, they keep the layaway amount of money. That makes sense, Jen? It was not easy. But with a stock, you actually have to buy the stock first. Whoever is buying the option couldn't spit out the sentence. Yeah. Okay. Whoever's buying the option, it's kind of like layaway. It's like if you have a car in your yard, it's like you want $1,000 for it. And Tony comes by and say, hey, I'll give you $1,000 for it. I'll give you $100 to hold it. I'll come back on Friday and I'll buy it for $1,000. If he doesn't show up on Friday, you keep the $100 and then you take the car and you sell it next week. Or it's the same thing with the pocketbook and the layaway. The pocketbook's $100. You put $10 up front. Hey, I'll be back on Friday to pick it up. If you don't come back on Friday to pick up that pocketbook and give them the $100, you lose your $10. Same thing. What we are hoping for is that the person doesn't show up. Okay, and whatever. JC Partner, how many positions do you play on average per week? Well, I have 5 different accounts. Okay, the 2 accounts I share with you guys, it's between 4 and 5 per each account. Now I have one account that has about 30 positions in it, but total different strategy. And I do not share that strategy on this platform. And I do not share that strategy for free. It is what it is. Great analogies. Did you like that one? It's like, us older folks know what layaway is, It's like you go to Christmas and you do all your shopping. Oh, I'll take this. Okay, the layaway plan. All right, here's $50. I'll come back, give you $50 every week, and then eventually I have it all paid off. Same thing, but instead we're buying the stock and we're selling some of the option. The person who's buying the option, they're doing the layaway plan. Either it works for them or it don't. Preferably it works for them and we get it back into cash on Monday. Did you like that, Jen? Did you tell your mom you're out of the closet now? For you guys who don't, that's an inside joke. What it was is we were doing a live broadcast today, because Jen's part of the live group. And to get peace and quiet, she had to go into her closet to do her trading. So we're making fun of her. It's like, what's your family going to say when you come out of the closet there, Jen? I understand, because I used to do the same thing. I used to go into the closet, close all the doors, close the bedroom door, close the closet door, and then all the closing, they absorb all the sound, so people can't hear what you're saying, can't hear what you're doing. Did you like that, like sound waves? Yes, that's correct. While the seller receives it. Yep. All right. Anyway, so that was WBA. So as you can see, as the stock went down, right, I doubled down once, which means at dollar cost averaging. So you're out of the closet. Yeah, I'm out of the closet for a while. Okay, so the green represents when I buy. Okay, I bought stock here, sold option, sold option, sold option. I bought more stock to bring my cost down. That's called dollar cost averaging. Okay, then I sold. So I've had it for 7 weeks so far. Okay, so, and I still own Walgreens, but I don't mind. You know why I don't mind? Okay, so I'm into Walgreens at $21.62. Okay, I can sell the 21s on Monday for 35 cents, which is more than 1%. But more than likely, I'm going to sell the 21.50s. and only bring in 19 cents. It's a little bit less than 1%, but as you see, after you do all the math from the dividend I collected and the 6 premiums I've collected, 6, there you go, there it is, 6, the 6 premiums I've collected, I'm well over 1% per week. I can even go down a little bit further and collect even less and still be over 1% average. Okay, so I like Walgreens. I don't mind holding on to it. It's Walgreens. It's in every major city. All right, anyway, next on the list, NSA. Who the heck is NSA? NSA. Oops. National Storage AFF. Never heard of them. Okay. No dividends in January. No dividends in February. March 14th. That was yesterday. Okay, so there's no point in us taking a look at something that paid a dividend yesterday. There's no way we can take advantage of it now. And it wasn't on my list, so I'm not really quite sure. NSA. And it's a monthly. Okay, now there's a reason why I don't do monthlies. Now, for those of you who have that question rattling around upstairs, let's take a look and I'll explain to you why I don't do monthlies. Now, a year ago today, NSA is at 41.56. Okay, they bottomed out at 27.83 back in the end of October. Okay, the 90-day top was the beginning of the year, January 2nd. Okay, and that's 42.52. Okay, she drops down to a 30-day bottom at 34.57. Okay, now these are all numbers you can check any way you want because they are what they are. There's no hiding, no what do you call it? No. Okay, so, Instagram just left us. So YouTube left us and Instagram left us. That happens when you don't charge your batteries. Okay, so here we are, 30 days ago. Okay, she drops down to a 30-day bottom there. And then she jumps up to a 30-day top right here. Okay, so after the 30-day top, the market maker is taking away that profit. If you don't take your profit when it's there, the market maker might take it away from you, which is exactly what he did. Look, okay, what was the reasoning from him going from 38? What was it? Okay, so you have 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days to the upside. Okay, now you're at 38.22. If you didn't take your profit then, what happens the next day? Market maker drops it down to 37.50. You don't take your profit then, he drops it down to 36.35. If you sell the option, you will immediately collect the premiums. That is correct. Or do you have to wait for the buyer? All right. Ooh, good question, Maggie. Now, when you buy or sell, there's something that's called a market order or a limit order. A limit order means you're limiting what you want. Like, what do you want to pay for it? I only want $5, or I only want 50 cents, or I only want this, or I only want that. That's a limit order, and the market maker can fill it whenever he feels like it. Now, a market order, okay, he has to fill it right away. Okay, O's, is that right? O's? Okay, Costco, no, sorry. Hi, I invested in Tesla. Good for you. I don't do Tesla. They don't pay dividends. When Target gapped up, I didn't understand why you had to pay someone exercising that. Oh, well, here you go. Now, when you sell an option, okay, I bought the stock at 135. It was down to 110. I sold the right for someone to buy it from me. I think it was like 114, 115, somewhere in that area. Okay, I only collected 50 cents, so I received. Someone bought it from me. When you buy an option, you have the right, not the obligation, to buy from the time you buy it until the time it expires. Okay, that's what an option buyer does. They have the option to buy it before it expires. Now, it expires on a Friday. Now, it went from 110 to 126. So I had choice. The market, the price went from 50 cents to $12. Okay, so my choice was, okay, and I didn't have a choice of what my choice was. Okay, I either buy it back at the $12 a share, or whoever bought that option could buy the stock from me at 110, and I would lose $25 a share. So lose $12 a share or lose $25 a share. That was my choice. Okay, you dance to the music. Eventually, you are going to pay the fiddler. Okay, is there a difference in fees between market and limit order? Yes, there are. No, wait a minute. No, there isn't any difference. You're just deciding what you're willing to take. Okay, if you say I'm willing to take $1.20, that's what your limit is. Okay, this is what I want, and I'm not taking any more or any less. That's it. Okay, but market order, you take whatever the market maker gives you. Okay, and it's usually what it's at the market at that moment in time. Doobie Uber, nice of you to show up. Hey, this is not a dividend stock, but can you look at Game? No, sorry. Thinking about Game at $1.35 a share. Thoughts? Okay, Norse, KVU is a spin-off of J&J with Aristocrats lifts. Can we look at it? Well, if it's a spin-off, it doesn't have any historical performance behind it. Okay, and it would be kind of a waste of time to look at something that's not up for consideration. Now, I'm very picky about the stocks I buy. They have to have 20 years or more of increased dividends. Okay, I didn't realize you could buy it back. Yes, you can buy it back. That's why we look at 3:30 on Friday. All right. Now, is it going to get called away from us? All right. If we could buy it back for a penny or 2 cents, why wouldn't we buy it back for a penny or 2 cents and get us in a better position on Monday? It all comes down to the numbers. You have to realize what the implications are. Okay, so DB Uber, Game is a monthly. Oh, I was going to tell you why I don't do monthlies. Okay, here's why I don't do monthlies. NSA. All right, so we have NSA right here. Somebody wanted to take a look at it. All right, Mikey. O is a monthly. I'm about to explain to you right now why I don't do monthlies. Are you ready? All right. So 30 days ago today, NSA is at 36.66. Got a 30-day bottom at 34.50. We got a 30-day top at 38.74. What kind of manufacturing business are you getting into? Well, I'm going to manufacture pod drives for solar electric boats. I'm going to convert boats to run on solar electricity. Why? Because I'm in Florida for a large part of the year. That's where my kids live. There's nothing like a free ride. All right, so anyway, 36.19 is what the current price is for NSA. Now, let's take a look at the options. Okay, so the bid 35.80, the ask 42. All right, so let's say hypothetically we do the 38s, the 35s at $1.80. Okay, so 35s, even at the last price, we'll be losing $1.19. Okay, $1.19 from that, and then it's 80, 70, 61 cents. Okay, so we're collecting 61 cents profit. All right, now a 61 cent profit, Claire, 61, and then we divide it by the purchase price, which at this time we'll use the last price, 35, because we sold all that stuff, and then I get with a return of 1.7% for the month. So we take that 1.7%, we divide that by 4 because it's 4 weeks in a month. And that comes to a grand total of less than 0.5% per week. So, monthly options are great if you don't mind, doing it once a month, if you don't have the time. But you're only collecting like 1 or 2% per month. Okay, 1 or 2% per month comes to around 24, between 12 and 24% per year. Okay, I like 1% per week. That comes to around 50% per year. I can double my money in 18 months. Okay, but monthly, it would take me 4 years to double my money. Okay, so that's why I don't do monthlies. O, Mikey, O is a monthly. I don't do O. O may be a great stock, and they may have, great dividends and great premiums. but they're monthly. They don't give options on a weekly basis. So that's not on my list. Okay, so that's why I don't do monthlies. And NSA is the monthly. How you doing, hon? Honey's come out to visit. Hi, honey. Say hi. She's just waving. Okay, what kind of manufacturing business are you getting into? I'm going to manufacture pod drives for solar electric boats. The U.S. market is way behind on the electric boat. What do you call it? The electric boat wave. What do you call it? Wave? Movement? The electric boat, whatever. But the Europeans are way advanced on the electric boats than the United States is, which is kind of weird because Elco is an American-made company. Elco's been making electric boats since the 1800s. And if you didn't know, electric propulsion was before gas and diesel and steam. Okay? It was electric first in the 1880s, I believe it was. I think the first electric boat was in 1840s by some Russian dude. But anyway.
Damn Russians.
Anyway, yeah, Americans are way behind on that. Can you trade monthly options weekly? Not really, because they're monthly options. I mean, yeah, you can buy it and sell it if it goes down, but it's still only once a month, and the option premiums suck. Okay, or let me get politically correct. Less than desirable? Exactly. Lee Fiocco. Okay. All right, so anyway, that's why I don't do monthlies. It's just not worth it. NUE, we looked at this one a little while ago, but we'll take a gander at it again. NUE. NUE. Okay, NUE is going to be on the 27th. Okay, not next week, but the week after, the 27th. So it's 2 weeks away. So let's take a look at the numbers for NUE. 189, the 190. Ooh, see that? I could buy it at 189.50. The closest one is 190. And it's paying 206. That's more than 1%. So the only thing now is, how does the chart look? Now, I'm going to put up the 1-year chart, and the very first thing I want you to take a look at, NUE. Before I hit the what do you call it button?
Delete.
Yeah. Before I hit the enter button, sorry, I only can see out of one eye. If you haven't noticed, this eye does whatever it wants. This is the other one I see out of. Is PSEC another monthly? Another one of my favorites, but I'm constantly reinvesting in more. Okay, hold on, Mikey. We'll take a look at PSEC. Where did my pen go? All right. Okay, so it's 5 past 11. Okay, the wife came out for her nightly cigarette, so after this, I usually go to bed. We do that together. Okay, so anyway, I'm going to click on the button. What's going to happen? The very first thing I want you to look at. What's the high? What's the low? Where was it a year ago? Where is it now? And it's going to take you less than 2 or 3 seconds to see where's the high, where's the low, where was it, where is it, whatever. You ready? Okay, hit. High, low, where was it, where is it? Okay, now, if you're looking like I'm looking, the 90-day bottom is here. Look at all that run up. All of this right here is potential profit taking. If you don't take it, the market may gap it down and you can lose that opportunity. Just joining in. New to Robinhood, so overwhelmed. Any suggestions? Okay, JJ Ria. Robinhood is a very simple, easy platform. It's one of the easiest ones I've ever seen. Okay, you pick some decent stocks, you buy, you sell, and they have everything right there at your fingertips. Okay, so let's go back to NUE, Nucor. Okay, one, I don't like it because look where it is. It's way up there. All right, so let's take a look anyway, just in case you liked it. A year ago, we're at 148.15. Okay, the bottom of the year, okay, right here, the end of May, that was 129.93. The last 90 days, right there. Okay, 90 days ago today, we're at the 90-day bottom, 153.25. And look at the run-up between there to the high. All right, so let's take a look at the last 30 days. Okay, 30 days ago, okay, we opened up at 181.42. Okay, 181.42 was the opening 30 days ago. Okay, so we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days to the 30-day high. Okay, from here to here, 10 days. And what happened? Down, sideways down. And look at what happened on today. Okay, so 30-day high was 195.03. She drops to the 30-day double bottom at 180.62. And then look what happened today. Okay, the market maker took all this away from you with all those downs. Hey, Secretariat, nice you to show up. On KSS, I did cheat a bit with the swings and buy back calls when lower to lower my cost. Okay, that's great. I have to see the whole equation before I can praise you, you know, because I have no idea what we're talking about. Because anyway, we're at Nucor. Okay, so Nucor is at 188.48. Now, I like 2 days to the upside before I get excited about anything. Okay, so we have a 30-day high at 195.09. Okay, a 30-day double bottom at 180. Okay, today she opened up at 182 and went all the way up to almost 189. That's a big jump in one day. It doesn't normally make these big jumps. Why did it do that? That's the question. Now, you take a look at the movement on a normal day. Okay, what's the opening? What's the high? What's the low? What's the difference? What is the average movements? Okay, what is that? Holy crap, we only got 75 people here. All right, we're going to take a look at one more, then we're going to go to bed. Only because it's Friday night. Not a lot of people hang out on a Friday night. Okay, so if I was to buy NUE Monday, 189.50, okay, that's the purchase price, 189.50. The closest strike price is the 190, and that's going for $2.06. If you like Nucor, always remember, number one rule, never buy something unless you plan on buying it and holding it for a long time. All the cool cats are still here. Yeah, Jen, all cool cats are still here, but I'm getting tired. I'm getting tired. Wait a minute. My eyes were tired and my sights were dim. It's time to stop for the night. There she stood in the doorway. I heard the mission bell. Okay, anyway. So, the 190 is going for $2.06. That is the closest one to the current stock price. If you like the stock and don't mind holding it. I don't know how many times I have to say that because some people get a little upset when the stock goes down a little bit. Okay? The stocks go up, the stocks go down. That's all they do. They go up, they go down. They don't come and wash your car. They don't mow your lawn. They don't even make prank phone calls to your ex-wife. They don't do any of that stuff. They go up. Really, she says they really don't do laundry. Do you strictly look at the history or do you play news or earnings? All right, Mikey, I've seen positive earnings where stock goes down. I've seen negative earnings where stocks go up. So I don't really do either one of those. But let's take a look at Nucor. I didn't look at the seasonality, but thanks for reminding me of that. Okay, this is what Nucor has done for the last 30 days. Now, what has Nucor done for the last 10 years? Well, let's take a look. Okay, normally, Nucor, nice steady growth all year long. Look at that. Nice and steady. Down here in January, ends up here in December. Nice, smooth, steady growth. No big highs, no big lows, no big interruptions. Okay, the blue line represents this year's movement. The red line represents 10 years worth of data. The average movement over a 10-year time frame. Okay, 2014, 2015, 2016, 2017. Hey, Macarena, whatever. Anyway, so that's historical performance. Now, does historical performance give you an idea what it's going to do? No, it just shows you what it did. That's like driving, looking in the rearview mirror. Okay, we're going forward, but we're looking what we did, last year and the year before. Now, it's a good. That's the wife said that's how she drives. She likes to make comments off screen, so you guys can't hear her, can't see her. But I can hear her. All right, so anyway, as I was saying, the current price, $89.50. Okay, the closest strike price is $190. Okay, the closest strike price is 190. So if I bought it at the current market price, $89.50, and I sold the 190s, I can collect $2.06 a share. I know it doesn't sound like a lot of money. People always say, why would I want to collect $2.06? Well, here's the thing. And I divide that by the purchase price, 189.5. That comes to a grand total of 1%, 1.08. 1.08, which is more than 1%. Okay, now, interesting thing. If the stock goes above 190, I'll be back into cash on the following Monday. And I'll also collect the additional 50 cents between the purchase price, 189.50, and the strike price, 190. Okay, so it's all about the numbers. Number one question I asked, do I like Nucor? Do I mind owning Nucor in the long time in case it goes down? Number one, always, number one question, do never buy something unless you're okay with owning it in case it goes down, because that's part of the game. Nobody wins them all unless your name is Pelosi. I'm starting to understand the math. All right, Ellie Soundways, way to go. Now, if it does go above 190, you get that premium right away, that $209 per share. Okay, 100 shares, that's $206. 500 shares, that's over $1,000. Okay, so however you do it, first, do not buy it unless you're okay with it and owning it for a long period of time, because you just might. Now, the longest I've ever owned anything was 9 months. Okay, I'm in, I collect my premiums, I get out. Okay, and then I go on to the next stock. I got 150 stocks, 13 weeks. Okay, there's 4 quarters. Each quarter has 13 weeks. First quarter looks exactly like the second quarter, which looks exactly like the third quarter, which looks exactly like the fourth quarter. Okay, you guys are still looking at the first quarter. Pelosi has information we don't have. Yeah, Michael, you're right about that. But, you know, I don't believe in cheating. I don't. I like to live an honest life, and I like to believe what I like to lead by example. Okay, when I say 10-minute trader, it means I sit in front of my computer for 10 to 15 minutes. That's it. I don't spend hours and hours looking for the best things and tell you it only takes 10 minutes. No, it doesn't work that way. I sit in front of my computer, I turn it on and say, hey, here we are, let's go. And then I look at it and I look at the 10 minutes. But I've already did my research on each company. So if a company's on my list, it means I've already researched it, and there's a reason why it's on my list. All right, you guys, I'm going to call it a night because the wife is getting ready to go to bed, and I miss her, so I'm going to go join her. Look at one more, PSEC, because somebody asked me about that one. Quickly take a look at PSEC. First of all, PSEC. Hun, I'll be there in a little bit. Okay, PSEC has its dividend on the 26th, which is in 2 weeks, and that is 6 cents. Do we really want to chase it? Marcia Stewart had insider information too, but in her case, it landed her in jail. Yeah, because she's not a congressman. Fucking Congress people. PSEC. All right, PSEC is the monthly. Nope. Sorry, guys, I don't do monthlies. So that being said, it's been a joy this evening. You guys, not a whole hell of a lot of people show up on Friday night, so I have no problem whatsoever bugging out early. Okay, but we'll be back here tomorrow night. Okay, and tomorrow night, most likely, I'll have my returns for the week. Wait, dude stuff, you better make it quick. I'm getting ready to turn stuff off. Serious question. Hurry up, dude stuff. Like I said, getting ready to turn it off. Quick. It doesn't take you that long to type it up. Good night, Al. Jen? Oh, no, we didn't do USB. Hey, Winner 86, we'll take a look at. I'll put it on the first list. First thing on the list for tomorrow, USB. USB. You know why tomorrow? Because there's nothing you can do about it today anyway. Thanks for streaming, Mikey. I enjoyed the commentary. Hey, not a problem, Mikey. 186 sounds good. Well, I don't think... No, I didn't do USB yet. That much I do know. Okay, someone asked me to wait. He's not chiming in, and I know it doesn't take that long to type. All right. Anyway, well, if you have a question, tomorrow night's another night. Have a great night, guys. Okay, honey, you want to put your phone on the charger? It died. What is it doing there? is 100% my fault. I didn't blame Anthony, even though we know it's his fault. Oh, you going to hang out with the young lady? Well, you enjoy your evening then, sir. Me and your mom are gonna swing from the chandeliers. Woohoo!
All it takes you out of the box. Love you. Good night.
See you later. I'm coming in a second, honey.
Come on, go on the door. And I'll be getting on it.